I think some people are confused with what is going on with the market right now. What's going on, guys? It's Ricky with Technical Solutions here with a super quick market update in preparation for what's to come this upcoming week. I really hope that you learned something new. And if you do, please consider dropping a thumbs up and subscribing if you feel like we earned it. Let's go ahead and jump right into it. A lot of you guys know that, yes, I do believe overall markets are overbought. Yes, I really do enjoy shorting a lot of these overbought setups, but I don't think enough of you understand that I don't like carrying these shorts overnight. My LPP team, they watch me trade live every day. They work with me on a daily basis. They are well aware that I get in, I get out, I make my money, and I bounce. Right now, although markets have pulled back the past week, and I wanted to show you this, on the 4-hour time frame, yeah, we got a really nice retracement from highs of, this is QQQ, which is the NASDAQ ETF, from 638 all the way down to lows of 600. It's a beautiful retracement, but guess what? 1 week of a pullback does not define a market reversal. Sentiment did get a little uncertain. I do agree with that. I don't have enough conviction that markets will continue to sell off, especially with how irrational markets have been. As you guys can see, that ever since the recovery of the trade war from lows of 400, ripping up to highs of those 600, again, markets are incredibly bullish. True direction and overall direction on the larger time frames are in favor of the bulls. So does it not make sense to short? That's not what I'm here to say. All I'm saying is that shorting right now, in my opinion, is kind of like buying at all-time highs and thinking that it still has to continue to go up, especially when all the signs were kind of like signaling that, hey, we might be at the top. It doesn't really make sense to buy up here, yet every crypto bro continues to buy. Again, the whole thing is that we want to be what most people aren't, and that is calculated and intentional. That's all I'm here to remind you. You shouldn't be afraid to take advantage of opportunities, but please don't over leverage yourself and take such a large position that if market direction, again, shouldn't be a surprise, if it does find a support and does begin to recover back to all-time highs, that you end up giving back all the money that you made as you made money shorting the market. Remember in yesterday's video, I made it very clear. Markets were selling off, everyone was panicking, and I was like, hey, Trump is going to make an announcement in the next few hours. I would not be surprised if we were to see a V-shaped recovery. Remember, none of us can predict the future. I've been wrong more times than you have because I show up and I try every single day. But guess what? It doesn't hurt to prepare. In the sense of, well, what do you mean by that, Ricky? Well, if I knew that markets were selling off, but they were kind of lacking progress. They were already incredibly oversold on the day. And we knew that Trump was most likely going to make an announcement, and he's notorious for making very bullish announcements. It's probably not safe to carry an open short at extreme oversold levels for the day, knowing that there could be a catalyst-based event that could turn against you. Again, it's not predicting the future. It's simply preparing, meaning that, okay, I'm going to close my short in preparation of, if there is a reversal, the reward of it potentially selling off a little bit more no longer outweighs the risk of a potential recovery. And I'm so glad we did that. I shared that with my LPP team. I even shared it with you guys publicly here on YouTube, just making you aware. Again, I can't predict the future. I've been wrong more times than, I'm sure many of you guys have even tried. But that's the whole point of me showing up every single day and at least trying, right? Is preparing. A very crucial thing is that right now, during uncertain times, be mindful of your position size, but also be mindful of your positions. We often say that being cash is a very, very, great position to be in, meaning that you're not in anything because you're still unaware if markets are going to recover or going to continue to drop. As of right now, on the technical side, that's all I'm talking about. We are setting up for a nice little recovery. We'll see. If we form a lower high, it ends up getting rejected here at the moving average and builds another leg down. We have a pretty interesting week ahead of us. As you can see, a handful of different companies. One of my personal favorites, Oklo and Beyond Meat. NBIS, a bunch of these bullshit companies are reporting earnings next week. You guys know that I hate companies that pump. And it's not even that I hate these companies, because these companies really have nothing to do with it other than Opendoor. Opendoor, their people are actively saying like, no, like our company is worth this amount. That's insane. These companies really are not controlling it. It's the people, right? It's retail traders encouraging other beginners to buy at all-time highs with these speculative companies that either don't make money or lose hundreds of millions of dollars, like Beyond Meat or Oklo, that's pre-revenue, yet they have insane valuations. Again, I'm no one to tell you don't invest in companies that you see value in. I'm just here to remind you that if they are showing signs of it possibly being overbought and possibly being overvalued, just please make sure that you're not leveraged. So at least if you take a loss or markets begin to retrace, it's only the dollar amount that you have in it that is your exposure for potential loss. That's all I want to say. If you want to go long on it, again, like I said, I am no one to discourage you for you to invest in any of these companies, right? While I'm talking about that, I want to talk about some overvalued companies very quickly. The first one that I quickly want to bring up is MSTR. I don't even think I have it up here. A lot of people are asking me, Ricky, MSTR selling off. MSTR, you were right. Be careful shorting it here. It is approaching previous support range at around $200. Again, it is very important to understand that patterns tend to repeat themselves. They don't always have to. Yes, I like shorting this stock, but I like shorting it when it's overbought and overvalued. When the downside potential, because it normally has a resistance right around 400, the downside potential to 200 is much greater than the upside potential, right? So if we use this little setup here, if we were to take a position at 400, my downside for it to go back down to 200, or my upside risk, it has great ratios. It aligns with my trade criteria, right? The downside for potential profit is much greater than what could potentially go wrong. But now it's the opposite, right? Now we have a setup where it's approaching a support. Markets are irrationally bullish. And anything can happen next week where they can begin to recover. And if the markets begin to recover, Bitcoin can begin to recover. And if Bitcoin begins to recover, then MSTR has the possibility to recover. Because remember, it's not about this company being a shitty company that loses money and that all it does is borrows against its investors to buy Bitcoin, diluting investors. We all know that. Everyone knows about the Ponzi scheme that MSTR is. But guess what? During these irrational market conditions, these companies can still thrive. So again, then ask yourself, well, what is my risk to reward? Well, again, now because it's oversold, now it almost makes more sense based off of technicals and previous support levels that this thing actually has potential to recover if it follows previous patterns. I would not go long on this myself. I'm just saying it doesn't make sense risk to reward ratio wise to continue to short, in my opinion, based off of my criteria. It makes more sense if this was any other company based off of technicals. There's greater recovery potential than there is downside risk. Now, again, market direction is still bearish, so therefore criteria still needs to be met. As of right now, it's still forming lower highs, lower lows. Direction is still in favor for the bears. All I'm saying is, again, I love shorting the market, but we have to give respect to the bulls because right now it's still their territory. MSTR is kind of a different example because it's been such a shitty company. It's been selling off before this recent pullback. So that's kind of a different story. But nonetheless, I wanted to come on here and make it very clear. No, I will not continue to short MSTR at a support range of $200 unless we get a complete shift of sentiment. Bitcoin drops below 95,000 and then enters another leg of a downturn. At that point, things are probably beginning to get much worse for the market and much worse for Bitcoin and closer to MSTR's average price of like 74 or 76,000 per coin, which can cause panic. And I would love to sell if the price action supports it. But again, it's all based off of criteria and risk to reward ratios. So please take that into consideration. Don't even get me started with Open. This one's probably the one that irritates me the most. And the reason it irritates me the most because it's not just people on social media, like very popular on Twitter or X.com. I hate seeing it that institutions, people with a ton of followers are encouraging beginners to be leveraged and to buy Open as it nearly traded at all-time highs when it went from 51 cents per share all the way up to 10 to almost $11. This is a 1,700% return in, what was that, a little over 2 months? That's the part that irritates me about this, is that there is no benefit of the doubt that is given to the downside risk because beginners don't take that into consideration. When you encourage beginners to buy at all-time highs, you put up all these, oh, this thing's going at $82 per share. It's off of what? It didn't even earn this 1,700% return in 2 to 3 months. If you look at the actual financials, please, I encourage you to dig deeper. You have even the CEO and the executives talking about how they're changing Open into becoming an AI company. Opendoor is a bullshit failing business that loses $300 million a year. They are trying to restructure it, but it's a second or third best to what Zillow is. And Zillow's not even there. It is a failing business with declining revenue in one of the most bullish markets right now. So if it's failing as a business during a bullish market, think about that. Let that sink in. How do you think it's going to perform during a bear market? People hate to hear the facts. Look at the data, understand, look at the flows of how much revenue they bring in and how they lose $305 million a year. And that it's not that it's getting better, it's gotten worse the past few years. Again, anyone can talk about how good they plan their company to be, but the proof is in the pudding, in the numbers, in the data. And the data and the numbers are not matching with what they are saying. You can talk the talk, but you are not walking the walk. That is why their EPS came in lower than what was expected. And this is based off of most recent earnings. This was a 33% miss. Opendoor is not a new business. It's an established business that is still failing and continuously losing more money. So again, if it was not for this recent push that people are treating as a meme play, that's how I see it. Again, if you want to invest in this company, be my guest. You're an adult, you can do whatever it is that you want. I'm just here to encourage you, to challenge you, to actually have the data support the valuation and this recent pump. Because I think that this is going to be very similar to what we saw with BYND. Obviously, this was a more glorified one, but do you guys remember when I made videos when this thing pumped up for no reason in 5 days, an insane return? People hated that I talked bad about it. But again, the fundamentals and the data simply did not align with the price action. It's a meme play. And once hype and once demand shifts elsewhere, they dump it. And you get left holding the bag. Please, in a market full of greed, when all the red flags are signaling, I wanted to show you this. Potential reasons for downturns, right? If the Supreme Court rules that Trump's tariffs go against him, the U.S. can refund up to $1 trillion worth of revenues. That's a current concern right now. Government shutdown is getting ready to shut down entire airports. We just got an update that they're possibly doing this in Chicago. Jensen said that China can beat the United States in AI. Not the best headline for semis. And even shortly after, I'm sure a lot of you guys have seen that clip that's been going around. We shared it where Sam Altman, the creator of OpenAI, pretty much gets very defensive when being asked, how do you have $1.4 trillion in commitments with all these different companies? Yet it's a business that only produces $13 billion in revenue. Obviously, there's red flags there. Market didn't like that because there was a lot of uncertainty. And if Jensen, who said that China is going to beat them, they might also have to trim down on, their output. Does that mean that demand is going to slow down for NVIDIA, one of the largest market caps that's really inflating the current valuation of our overall markets? Worst October for layoffs since 2003. Labor market fears potentially getting worse. And again, inflation is still rising. We're at 3% against the 2% target for the Federal Reserve. The labor market is weak, and it's not like cutting rates is going to help the labor market when it's being supposedly replaced with AI. Again, all the red flags are there. So if that is the case, does that mean that you need to be super scared? Of course not. I have a bunch of long-term investments. I have no intention of fully selling. All I began to do was I trimmed down on my positions. I began to rotate out of big tech and move more of my exposure into more what I see to be recession-proof companies, recession-proof businesses. And I am sitting on a side of cash where if markets do retrace, remember, I can't predict, but I can always prepare, because if markets do pull on back, yeah, I like shorting, some of these companies intraday, but most of this money is made, we all know, long term, buying good quality companies at a deal when there's blood on the streets. And that's what I'm most excited for. I think one of the worst things that you can do is be incredibly over leveraged at all-time highs, that if markets do retrace, you get margin called, you get liquidated, and then when true deals do present themselves, you never want to touch the market again because you burned yourself based off of lack of structure and greed. So that's really all it is. It pays to be patient in this market. And I agree with that on both sides. Just know when to be leveraged and know when to be cash, or at least just with your actual money, so you're not borrowing money to take these positions at all-time highs. So other than that, I shared these data points yesterday where I saw this thing being shared on X. Like, the biggest bet I've ever taken was on MSTR in 2025. Turns out that it was literally the worst possible bet I ever could have taken. If I invested in literally anything else, I would have made an F ton of money. Thank you, Saylor, for creating a stock that only goes down. Again, not enough people are talking about this. In the past 3 months, the stock is down 37%. Yet, Bitcoin is down, but Bitcoin hit multiple new all-time highs in 2025. But guess what? MSTR did not. MSTR has not made new all-time highs since the end of 2024. There's a huge disconnect. So please, when the red flags are there, it's not that it has to scare you. It should just encourage you to dig a little bit deeper. You shouldn't be convinced or encouraged by people on social media to invest or make a bet on a company that truly has nothing to prove, right? Every trade, every investment that you take should be based off of your own criteria that aligns with your risk tolerance. And if it doesn't, then again, not saying that it will, but if it goes against you, it's going to put you in a very unfavorable position that's going to be hard to tolerate. And then, of course, something that a lot of people are talking about is Michael Burry's, shorts that he has on Palantir and NVIDIA and all. I really don't care much about this. And the reason why is I think it's just really good timing. But if I'm not mistaken, he took a short like in September for Palantir, from my understanding and what I've read. If that is true, Palantir was trading at like 165, 170. Right now, Palantir is trading at 174. So they're like, oh my God, he's made so much money. He is very popular because of the big short that he took on the housing bubble crash. I think that's great. But I also think it's important to note that he's also taken many shorts after that didn't pan out exactly according to plan. So again, do not trade something or do something just because someone else is doing it. Be intentional and be calculated based on your own risk tolerance. Again, markets are oversold based off of recent timeframes. They have been incredibly bullish. So the likelihood of them to recover, I think, is relatively pretty high because markets are so bullish. Unless we do get a trigger of a change of sentiment, markets do begin to sell off, then at that point, we can possibly see another leg down. And that's what I'm excited to follow up for. Again, when in doubt, never be afraid to cash out. Being and having a cash position during an uncertain time is so important. So if markets begin to go up or down, then again, you're able to take action based off of more clear direction and more clear data. I wish you guys nothing but the best. Again, we talk about these concepts within my LPP group. If you ever want to tune on in to watch me trade live, I trade live every single morning right at market open, and it's the second link in the description down below if you want a discount to join. We have people that signed up back in 2018 that still have access to it today, and they only paid once. So again, if you want to join to watch me trade live, it's designed for complete beginners. The second link in the description down below. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take care, team.